Good morning and happy Monday to our listeners. Today is shaping up to be an exciting day in the world of crypto with several major announcements that could have significant implications for the market.
That's right. One story that caught my eye is the upcoming token launch and airdrop for TapSwap, a popular Telegram-based game. According to Decrypt, the TapSwap team has revealed that their TAPS token will be launching on the Open Network, or TON, in the second half of January 2025.
For those who might not be familiar with TapSwap, can you give us a quick rundown of what the game is all about?
TapSwap is a tap-to-earn game that's gained a significant following on Telegram. The game allows players to earn rewards by completing various tasks and interacting with the platform. With the launch of the TAPS token, players will have access to even more features and benefits, including tournaments, staking rewards, and governance participation.
That's really interesting. So what determines whether or not a player will receive the TAPS airdrop?
According to the developers, the airdrop will be determined by the player's activity and engagement with the platform. The more a player has participated in the game, the more likely they are to receive a share of the TAPS tokens.
I see. So this is a way for the TapSwap team to reward their most loyal and active players. What are your thoughts on this strategy?
I think it's a smart move. By rewarding their most dedicated players, TapSwap is incentivizing people to continue participating in the game and engaging with the platform. This could help drive adoption and increase the overall value of the TAPS token.
That's a good point. The success of TapSwap and the TAPS token could also have broader implications for the gaming industry as a whole. We've seen a lot of interest in blockchain-based gaming over the past year. And this could be another example of how cryptocurrency is changing the way we think about gaming and rewards.
Absolutely. And speaking of broader implications, I think this story also highlights the growing importance of the Open Network, or TON. As a decentralized platform, TON is providing a foundation for projects like TapSwap to build and grow.
That's a great point. We'll definitely be keeping an eye on TON and its ecosystem as we move forward. And we'll have more on TapSwap and the TAPS token launch later in the episode. But for now, let's move on to some of the other major stories that are moving the market today.
We were just discussing the rise of institutional investors in the crypto market and how that's driving adoption. Now it seems governments are also taking notice. I saw an interesting piece about a Japanese lawmaker pushing for a national Bitcoin reserve.
That's right. Satoshi Hamada, a member of the National Diet, has submitted a formal request to discuss the idea of a national Bitcoin reserve. What's interesting is that his given name is Satoshi, sharing it with the pseudonymous creator of Bitcoin.
That's quite the coincidence. But seriously, this proposal could be significant. If Japan were to establish a national Bitcoin reserve, it would likely send a strong signal to the global market. Other countries might start to consider similar initiatives.
Building on what we discussed earlier about institutional investors, a national reserve would essentially be a government-level institutional investment in Bitcoin. It raises questions about how governments view the role of cryptocurrencies in their monetary policies.
Absolutely. This proposal also comes at a time when there's growing interest in central bank digital currencies, CBDCs. It's almost as if governments are exploring multiple avenues to integrate digital assets into their financial systems.
Speaking of CBDCs, have you seen the latest updates on the European Central Bank's digital euro project? They're moving forward with the investigation phase, which could potentially lead to a digital euro in the near future.
Yes, I did. It's interesting to see how different regions are approaching digital currencies. In the case of Japan, this national Bitcoin reserve proposal is more about hedging against economic uncertainty and less about creating a digital version of their fiat currency.
That's a great point. Satoshi Hamada's proposal mentions the potential for Bitcoin to act as a store of value and a hedge against inflation. It's a sign that governments are starting to recognize the benefits of diversifying their reserves with digital assets.
As we continue to follow this story, it'll be interesting to see how the National Diet responds to Hamada's proposal. If Japan were to move forward with a national Bitcoin reserve, it could have significant implications for the global crypto market.
We'll definitely be keeping an eye on this one. In the meantime, let's shift our attention to another story that's been making waves in the crypto space.
As we were just discussing the increasing institutional interest in cryptocurrency, it seems like a major player is already leading the charge. BlackRock's Ethereum ETF has been on a hot streak, pulling in over $1.5 billion in just 16 days.
That's incredible. We've been talking about the growing demand for Ethereum ETFs since they debuted 5 months ago, and it looks like investors are really starting to take notice. BlackRock's iShares Ethereum Trust has been at the forefront of this trend, with its latest $200 million bump on Thursday.
What's even more remarkable is that this $1.5 billion influx since November 20 brings the total net inflows for BlackRock's Ethereum ETF to over $3.3 billion since its July debut. It's clear that investors are becoming increasingly comfortable with the idea of adding Ethereum to their portfolios.
And it's not just individual investors driving this growth. Institutional investors are also taking a closer look at Ethereum ETFs as a way to diversify their investments. We've seen a significant uptick in allocations to these products over the past few months, and it's likely that this trend will continue into the new year.
Speaking of diversification, it's interesting to note that BlackRock's Ethereum ETF is part of a larger trend towards more specialized investment products. As the cryptocurrency market continues to mature, we're seeing more and more options emerge for investors looking to target specific assets or sectors.
That's a great point. As the market becomes more sophisticated, investors are looking for more nuanced ways to participate. Whether it's through Ethereum ETFs or other specialized products, it's clear that the demand for more targeted investment options is on the rise.
Building on what we discussed earlier about the growing institutional interest in cryptocurrency, it's clear that products like BlackRock's Ethereum ETF are playing a key role in bridging the gap between traditional finance and the crypto world.
Absolutely. As more institutional investors enter the market, we can expect to see even more innovative products emerge. It's going to be interesting to see how this trend continues to unfold in the coming months and years.
And finally, it's worth noting that BlackRock's success with its Ethereum ETF is likely to inspire other investment firms to follow suit. We can expect to see a proliferation of similar products in the near future, which will only add to the growing momentum behind Ethereum and the broader cryptocurrency market.
That's a great point to leave off on. As we continue to monitor the developments in the world of cryptocurrency, it's clear that the next few months are going to be very interesting indeed.
We were just discussing the impact of token airdrops on the NFT market, and it seems like Pudgy Penguins is the latest project to capitalize on this trend. They're launching their Solana token PENGU, and the community is buzzing.
That's right. With over 50 billion social media views and partnerships with retail giants like Walmart and Target, Pudgy Penguins has built a massive following. And now, with the token launch, their floor price has skyrocketed, reaching $100,000.
I saw that. It's incredible. They've become the second largest profile picture project in the NFT space. I think it's interesting that the IP owner, Luca Netz, mentioned that a founder's job in crypto is to maximize for optimal excitement. It's clear that they're trying to generate hype around the token launch.
Absolutely, and it's working. The airdrop has created a lot of buzz, and people are eager to get their hands on the token. But what's interesting is that Pudgy Penguins is expanding beyond Ethereum and into the Solana ecosystem. This could be a strategic move to tap into the Solana community and create more opportunities for growth.
Building on what we discussed earlier about the importance of community engagement, it's clear that Pudgy Penguins has done a great job of building a loyal following. And now, with the token launch, they're rewarding their community with a new way to participate in the project.
And speaking of community engagement, have you seen the Decrypt Scene Hub? It's a platform that showcases art, fashion, and entertainment in the crypto space. Pudgy Penguins is featured prominently on the hub, which is helping to drive even more attention to the project.
I have seen it, and it's a great resource for anyone interested in the intersection of crypto and culture. The fact that Pudgy Penguins is featured on the hub is a testament to their growing influence in the space.
As we continue to follow the Pudgy Penguin story, it'll be interesting to see how the token launch plays out and how the community responds. Will the hype sustain, or will the project experience a correction? Only time will tell.
One thing is for sure, the Pudgy Penguins team has done a great job of creating excitement around the token launch. And with their strong community backing, they're well positioned for success in the competitive NFT market.
All right, wrapping up today's show, we have to touch on the wild story surrounding a certain Solana meme coin. The token, inspired by a cartoon, saw a weeks-long feud between its team and the cartoon's creator, Philip Banks.
Yeah, and it looked like things were finally settling down when a supposed armistice was announced on Thursday evening. But in true crypto fashion, it was revealed that a hacker had compromised Banks's social media accounts to spread the fake news.
I mean, can you get any more crypto than that? A hacker manipulating the market with fake news and the token subsequently dumping in value. It just goes to show how volatile this space can be.
And it's a great example of why investors need to be cautious when it comes to meme coins. They can be a lot of fun, but they're also highly susceptible to manipulation and scams. We discussed earlier how the SEC is cracking down on unregistered securities offerings, and this story just highlights the importance of doing your own research.
Exactly. It's easy to get caught up in the hype surrounding a particular token, but at the end of the day, it's crucial to understand the underlying fundamentals and risks. And speaking of risks, we also talked about the potential for further market downturns in the face of global economic uncertainty.
That's right. While we've seen some positive signs in recent weeks, there are still a lot of unknowns out there. The ongoing banking crisis, inflation concerns, and regulatory uncertainty all have the potential to impact the crypto market.
So, what are the key takeaways from today's stories? For one, it's clear that the crypto market is still highly vulnerable to manipulation and scams. Investors need to be vigilant and do their own research before making any investment decisions.
Two, the regulatory landscape is still evolving, and we can expect to see further developments in the coming weeks and months. This could have significant implications for the market, so it's essential to stay informed.
And three, despite the uncertainty, there are still opportunities for growth and innovation in the crypto space. We're seeing new use cases emerge, and established players are continuing to build and expand their offerings.
That's right. So as we head into the weekend, it's essential to stay focused on the long-term potential of this market. There will be ups and downs, but for those who are willing to do the work and stay informed, there are still plenty of opportunities to be had.
And that's a wrap for today's show. Thanks for tuning in, and we'll catch you all on the next episode.